Welcome back, traders. Welcome to my YouTube channel. Today we are going to go to another trading view strategy that we can use for our day-to-day trading. Either you are a beginner trader or a professional trader, so this strategy might be useful for you. So without any delay, let's just go straight to the video. So first of all, let's just go through the indicator that we have on the chart. So first of all, we have smart money concept indicator by luxalgo. As you can see, this is the setting that I have on my system. You can see, so you can slow down or pause the video in order to see the setting that I use for this particular indicator, the smart money concept. So the purpose of this smart money concept is to mark the support and resistance zone of the market, and I also use it for the premium and discount zone. Most of the time when the market is at the premium side, that means the market is ready to reverse back. And then when the market is at discount, that means the market is planning to go up. So that's one of the things that I use the smart money concept also. And then you can see the smart money concept also mark the change of character of the trend, as you can see, and then other block is being marked also, as you can see it at the chart. So those are the things that I use the smart money concept indicator for. You can see it will mark the support and resistance level, and also sometimes the indicator may not be accurately perfect, so sometimes you have to mark some line by yourself in order to be more accurate in day-to-day trading. So the second indicator, we have EME. The EME is 200 EME, moving average exponential. The 200 moving average exponential. The purpose of this indicator is to check the trend, to know the direction of the trend. So the main purpose is when the market is above 200 EME, you'll be looking forward to buy, and when the market is below EME, you'll be looking forward to sell. That's the main purpose of the EME, just to identify the trend. So at the bottom of the chart, I have a TDI plus RSI divergence indicator. So this particular indicator is what I use to take my buy and sell signal. This is what I use to take my buy and sell signal. So for example, as you can see, whenever the signal line, the green and red line, is above the channel, this polygon band channel, I'll be looking forward to buy up. Whenever is is out of the polygon band channel at the top, I'll be looking forward to sell. For in terminology, when the market is oversold, I'll be looking forward to buy up, and when the market is overbought, I'll be looking forward to sell down. That is the major purpose of the of this TDI indicator. So, and then sometimes the strategy also mark the RSI divergence of the market. Just this one is not that more important, but it gives us more confirmation when we are preparing to enter any trade at that particular time. So without any delay, let's go straight to the rules of entry and exit of the market. So first of all, in order for you to consider any trade, you have to look at the trend. For example, now you can see presently we are below 200 EME. That means the market is trending down. So for example, this is an example of a trade. As you can see, let me give you the illustration. The market is below 200 EME, and then you can see the market is overbought around this area. You can see around this area the market is overbought. That means I will be looking forward to do what? To sell. You can see sell down. I will have take all these pips, but the reason why this, sometimes I go to one of the things I usually do is 1:2 or sometimes 1:3. So in order not to be greedy at the market, so every buy signal that you see, at that moment, it will be ignored. Reason that the overall trend of the market is sell, it's a downtrend. So the only signal we'll be taking is sell. So we'll wait for the market to play out. If you want to play, you wait for the market to play out. You can see the market play out, move up a little bit. Then every time that we have the market is overbought around this area, then when the market is overbought, we'll be looking forward to do what? To sell. You can see we place another sell signal and it's play out very, very well. You will ignore the buy signal, you leave the buy signal, then you still wait for another sell opportunity. The reason why we are taking only sell opportunity is because the market is trending down. So when the market is trending up, we'll be taking a buy opportunity. That's simple and straightforward strategy that I use for my day-to-day trading. For example, this is another setup. You can see the market is overbought around this area. You won't take this buy opportunity, you only take the sell. You can see you wait for the market to reverse back and make sure you wait for the market, the green line to cross the red. Line, then you will take your sell. As you can see, it also play out very, very well. So this is another opportunity, but I missed the opportunity anyway. This is another opportunity. Let's just measure like how many people will have get around this area. But the market, the strategy is very okay when the market is trending. As you can see, this is like 36 pips. So for example, if you are not sure about the market at that moment, you can just sorry, I delete some things. I want to add this back. Go to the indicator, then smart money concepts by luxalgo. Smart money. Okay, so we should be back. So now what I'm saying is, as you can see, this is about 36 pips. You can close it. If you are not sure about the market in 15 minutes and you want to take a very short trade, you can load down to 5-minute time frame. You can see the same trade in 15 minutes. You can see it clearly in 5 minutes. You can see this is another trade that you will have taken we should have taken. You can see. So let me just mark it for us to see from this area. That's it. This our 1:2. It's already. So in order for this particular trade now, you will leave the buy signal. Then this is another sell signal that is playing on right now. One ratio 2. So we wait for the market to play out, and then your stop loss will be above this 1:2. So as you can see, you can use the strategy in 15 minutes. I prefer 15 minutes most of the time because of the, sometimes the 5-minute will be somehow volatile, move very fast. But when you trade in 15 minutes is somehow more preferable, and then the pips that you get from 15 minutes is also much compared to 5 minutes. So let's go back to the 15 minutes. Let's go back to the 15 minutes time frame then. So one of the things let me give us a sample of the buy signal. As you can see, the market is trending down. So this is an example of the buy signal. You can see the market crossed the line, when the market crosses the line, crosses the 200 EMA, you cannot sell. You cannot sell. You'll be waiting for a buy opportunity. So when the market, you can see the market is overbought around this area, you wait for the market to oversold before you take your trade. From this area, you can see the market is oversold. This is clearly giving you a buy signal. So you can put your trade setup around this area. One ratio 2, 3 sometimes, but 1:2 for a beginner's traders, 1:2 is okay. So 1:2 every time. You can see this play out very, very well. In order not to be greedy in the markets. So as you can see from around this area, this is another opportunity for a buy signal. This is another opportunity. But as you can see, this is another opportunity for a buy signal. This is another opportunity. The market oversold around this area is above, then you can take your trade. The reason why we are getting only a sell signal is because you know the market is trending down. Most of the currency is trading down. That's the reason why we find it so hard to see the buy signal. This is another buy signal that I want to see. The market crossed the 200 EMA, then you wait for the market to be overbought. While the market is overbought, then you wait for it to oversold. On this area, you can see from this area the market is oversold. It's out of the channel. Then you take your trade. One ratio 2, 3, and see. So that's about that. It's not every time that we'll be in trade, but at least when we are in trade, we have that much confidence that the market may probably go to work out in our own favor, because we cannot be certain 100% that the market will go in our favor, because we cannot predict the market. We only predict it by following our trading plan and following our rules and regulations that we have set up. Then if the market now work in our favor, then fine. So, but one of the things that most of the beginners traders believe in is when they place a trade, they think that the market will go in their favor every time. No, market does not go to our favor every time. Sometimes the market play the way it wants. So that's that about that. So thank you. If you are finding value on this video, guys, please don't forget to subscribe to our YouTube channel. Share the video with your friends so that the YouTube algorithm can be nominating our video to other traders that would like to see this kind of information. So thank you very much. God bless you.